Hi, it's Larry Gaines from Options on the Open. We're the leaders in day trading and swing trading using options. Couple of interesting chart patterns setting up here, and I just kind of wanted to point them out to you. Hopefully they'll help you in your trading on the next day or two to come. So anyway, what I'm seeing here, this is the S&P 500, the SPX chart on a weekly, and this is showing you the Fibonacci retracement levels from the low put in 2009 to the high put in 2011. So if you draw from the low to the high, the retracement lines, you can see that the market has retraced from this high in 11, came all the way down to the 382, and then bounced, and now we're back up to the 236, which came in at 1204. So the market, had this little tail through there, but has not penetrated, and you can see the lower highs here. So I wanted to point that out. If you put a trend line on that, you can see that the highs are lower. Okay, so and it tailed off towards the end here. So watch that. That's a sign that we may have topped out. So that's one thing I wanted to point out. Now here's the second thing. Now the second chart is a daily of the S&P 500 or SPX, and on this chart, this is a Fibonacci retracement from the high of 2011 to the low of 2011 that we just made last week on October the 4th. Now what you're going to see here is we'd had this big time retracement back up almost over 12% from the low to the high, and we've went back and retraced all the way back up to the 382, and you can see here we came up to the 50% retracement right here. So here the highs are lower, okay? And the other thing, this is the 236, which I showed you just a minute ago, and that line is coming in here, and we closed right about on the 236. Now the other thing to point out are the candlestick patterns that you're seeing here. This pattern where you have this long tail and a block body like this is called a shooting star candlestick. And this particular candlestick formation is a bearish formation on the candlesticks, and it usually is a sign of a top in the market or a trend reversal. So you have this shooting star here. You can see this shooting star back here, right here, and the market went down. You have this shooting star here, and the market went down. So those are some factors that are all kind of piling up, showing you that maybe we're at the top end of the range. So keep that in mind. And I'll show you one other chart just to show you the same kind of example. This chart is the daily chart for the Qs, QQQ, which is the NASDAQ, and it's had even a bigger move. Technology stocks have really been moving hard. So that chart. Now, as you can see, here's another shooting star pattern for the Qs. So again, you've had this high, this is a lower high, you're coming in here. So there's a potential that this might be the top end of the range, and just be heads up on that, and be aware that we've had a fantastic run up, so it may be time to take a little profit if you're long, and if you're looking for a good entry place for a short, this is a place where I started putting back on some short positions. So take it in stride here. Have a great trading day tomorrow and the rest of the week. And if you'd like to learn more about how we trade and use our power cycle trading model and options to trade, day trade, and swing trade, please join me at optionsontheopen.com. That's optionsontheopen.com, and thank you for your time.